Sir, very happy evening to all. I believe that you have done your law examination very well. This video is not about the analysis of the law examination. This video is about the killer 15 marks, what you are going to get from the IDT amendments. My dear lovable students, don't miss this 1 hour important, very important amendments for our examination. Sir, the first amendment from the first chapter, supply. These are just circulars only. Circulars in the sense means clarifications. That means there are certain doubts. So government is saying that this is supply power, this is not supply power, like that. That's what the circulars is all about. For example, 3 parties are there. Number 1, holding company. Number 2, subsidiary company and employee. This employee is working in the subsidiary company. And in order to motivate that employee, subsidiary company is saying that we will give ESOP, employee stock option plan, and you will get the shares of the holding company. Wow. Shares of the holding company. And for that, for issuing shares or securities by the holding company to the employee, my dear lovable students, this subsidiary company is paying consideration to the holding company. The question is, service provider, the supplier is holding company, they are situated outside India. And the recipient is the subsidiary company, they are situated in India. Will this amount to import of goods or services? And whether GST has to be paid on RCM is the question, my dear lovable students. So, ESOPs will be there, ESPP will be there, RSU will be there, are employee benefits, not supplies under Schedule 3. Because we know that service provided by the employee to the employer in the course or furtherance of business will not be treated as neither supply of goods nor supply of services, my dear lovable students. Securities and shares are not goods, not services. So buying or selling is not a supply. If you see the definition of the goods, definition of the services, it is neither supply of goods nor supply of services. Sir, cost to cost reimbursement by the Indian subsidiary to the foreign holding company is not subject to GST. Now, actually the holding company has given shares to the subsidiary company. Not directly to the subsidiary company, but to the employees of the subsidiary company. For that, subsidiary company has compensated the consideration, my dear lovable students, which is on cost to cost basis. Cost to cost basis. Sir, if the subsidiary company paid anything extra, any extra fees paid or markup, commission by the foreign company for issuing securities, then it is treated or taxable under the GST as supply of services under RCM. But if subsidiary company is paying something extra, then my dear lovable students, it will treat it as consideration. It will be treated as importation of services. Sir, hence the subsidiary company will be liable to pay tax on RCM. Simple one line. If the holding company gives shares to the subsidiary company, that is to the employees of the subsidiary company, and subsidiary company is reimbursing them on a cost-to-cost basis, it is neither supply of goods nor supply of services. One case study, one quick example I will be giving. ABC Tech Private Limited, an Indian subsidiary of Global Tech Incorporation, a US-based company. So, holding company is outside India. Our Indian subsidiary company is ABC Tech Private Limited. Offers its employees ESOP as a part of their compensation package. When an employee decides to exercise their stock option, Global Tech Incorporation, that is the holding company, directly transfer the shares to the employee. Yes. ABC Tech Private Limited, that is our subsidiary company who are situated in India, reimburses Global Tech Private Limited for the cost of these shares on a cost-to-cost basis. If that is the scenario, as per circular, my dear lovable students, it is neither supply of goods nor supply of services. Are ESOP, ESPP, RSU transaction considered as supply of goods under GST? No. ESOP, ESPP, RSU transaction are not considered as supply of goods or service under GST. Securities or shares are neither supply of goods nor services as per the definition of the GST Act is what the first amendment is all about. I believe that you started falling into the amendment. The first one, romba easy. Coming to the second one, man, sir, simple. There is an insurance company, my dear lovable students. Sir, insurance company will insure the motor vehicles, etc. For example, there is a bus or car or sir, lorry, etc., etc. has been insured. Unfortunately, this motor vehicle has been got accident. Sir, once that it got accident, that car will not be looks like car after the accident. Correct? So, my dear lovable students, there are two options are there to the insurance company. Insurance company may say that, okay, pa, your car got accident. We are supposed to reimburse 10 lakh rupees. 10 lakh rupees we are supposed to give. Now you are having that damaged or destroyed car. If you scrap that car, you will get 50,000 rupees. You sell that car. Now balance 9,50,000 you keep in your hand. Sir, for this 50,000, whether GST will be applicable in the hands of insurance company or not is a question. No, because after the accident, the car is still with the car owner. That is an insured person. He is only selling in the open market and recovering that 50. Insurance company is reimbursing the remaining 9,50,000 rupees. For this GST will come, whereas for this 50,000 GST will not come. Whereas if insurance company is saying that, my dear lovable students, 10 lakh rupees is the amount to be reimbursed. Give that car to me. Take this 10 lakh, that's it. We will sell the car to whoever we want on a scrap or on a residual value, whatever. Then, when in future, if that insurance company is selling that, my dear lovable students, then GST will come. Now look at the circular. This is the circular, game over. Settlement of claim by insurance company. Salvage value of the damaged vehicle. That means insurance company is going to settle the amount. How they are going to settle? In two ways they can settle. Deduction of salvage value from settlement. For example, 10 lakh rupees they have to pay. 50,000 rupees is the salvage value. Remaining 9,50,000 will give by the insurance company to the insured. Then claim is settled after deducting salvage value. Am I right? Yes. Ownership of the salvage value is with the person insured itself. That means, my dear lovable students, this 50,000 rupees damaged car is with the insured person itself. Salvage value does not become the property of the insurance company because the property is still with the insured person only. So, deduction of that salvage value is not a supply. No GST is payable by the insurance company. This is the one way of settlement of the claim. Second way, full value method basically. Full insured declared value settlement. Sir, 10 lakh rupees is the amount to be settled, man. Entire 10 lakh rupees they have given. And they said that, kudu on the damaged car to me. Claim is settled on full value without deducting salvage. Yes. Ownership of the salvage is with insurance company. Yes, the ownership is with the insurance company, my dear lovable students. Now, sale of salvage by the insurance company. Now, the damaged car, insurance company will sell in future. So, they are making actually outward supply of the scrap. Then it will be treated as supply. Insurance company is liable to pay GST. That means they have to collect GST based upon FCM or RCM as the case may be. That is the second notification or second circular, my dear lovable students. Easy. So if it is deducted method, for the deducted value, no GST in the hands of the insurance company. It is full value method, my dear lovable students. Sir, there is GST on the scrap value. Right. Coming to the third one. I hope that your exams are going very well. All the very best. Study very well. Brilliant. After you become chartered accountant, you have to buy a super very good flat. What type of flat you like? My dear lovable students, I want beach view. I want sea view. I want, sir, garden view, etc. etc. So, when this property dealers, when they construct, they may collect some extra charges for the preferential location charges in property sales. Tiles போடுறீங்களா tiles? Yes, sir. So you have to check that this PLC charges are bundled with the construction service and not separately taxable. For example, if I am a Casa Grande, sir, I am collecting 1 crore rupees for the construction and 20 lakhs for the preferential location charges. Preferential location charges. So what is the taxability of that 20 lakhs? So 1 crore is for construction and 20 lakh, total 1.2 crores. What is the taxability of that extra 20 lakhs is what our discussion. Check. Is the construction intended for sale? That means, have we got the advance before issuing completion certificate? We know. If we get even 1 rupee before issuing completion certificate, it will be treated as supply of services. If the consideration is receiving after completion certificate, it is neither supply of goods nor supply of services. This point we already studied in the basic supply chapter. So, if the situation is the constructor Casa Grande got the amount before before completion certificate. Then PLC is a composite supply and taxable as construction services. Simple. That means for construction, if 12% is the tax liability, the same rate of tax will be applicable. Tax rate for composite and mixed supply, section 8 is the discussion. Sir, sale of building after completion. After I receive the completion certificate only, I am selling. At the time of selling, I am collecting 1 crore rupees and 20 lakh for PLC, my dear lovable students, total 1.2 crores. Then it is not a supply. Hence, PLC is not taxable at all. Sir, since the principal supply is, sir, neither supply of goods nor supply of services, even this 20 lakhs will also not be taxable. Fantastic to the core. All the amendments relating to supply comes to an end. Basically, actually, no amendment. Only clarifications from the department. Coming to the reverse charge, only 2 things are there. If you are selling metal scrap, when we studied the RCM, we have studied that goods services. In that goods, we discussed that, sir, if you are supplying silk or if you are supplying various oil and all, and if the supplier is an unregistered person and recipient is a registered person, recipient is the person who are liable to pay tax under RCM. To that list, one more item has been added. If the supplier is an unregistered person and recipient is a registered person, my dear lovable students, and supply is sale of metal scrap. Metal scrap. Very important adjustment for this time. Metal scrap. A supplier is an unregistered person and recipient is a registered person. Sir, supply is a metal scrap. Then, my dear lovable students, recipient registered person is the person liable to pay GST under RCM. That's it. Now, RCM for supply of services. They said that, sir, if the property is renting of immovable property other than residential dwelling, that means commercial property. The property is a commercial property. If that commercial property is, sir, rented out by an unregistered person to a registered person, then the registered person is the person liable to pay tax under RCM. That's it. That's it. Number 1, goods la one, service la one. Goods number 1, if the goods what you are supplying is a metal scrap supplied by the unregistered person to the registered person is liable to pay tax on RCM. The property is a commercial property and the service provider is an unregistered person and the recipient is a registered person. My dear lovable students, recipient is the person liable to pay tax on RCM. That's it. Done, done. We are done with the, sir, RCM amendments also. Coming to exemption, it is a little lengthy, but not very difficult and all. But sure shot this time exam questions will come. Actually, already in the existing entries, certain amendments they have made. Sir, they have added certain new entries. This is second category of discussion. And the third category, certain clarifications has been introduced. These are the 3 segments or legs we are going to discuss. Number 1 is accommodation services. So, newly inserted. Let me complete the first one, existing. Then I will come to the accommodation. Renting of residential dwelling. We already know that, sir, renting of residential dwelling for residential purpose to an unregistered person is exempted. Simple, there is a residential dwelling, weed, which has been given to an unregistered person. It is exempt from GST. But they are saying that this exemption does not apply to student housing or hostel or camp or paying guest accommodation. Sir, there is a exception created. That exception is what? Accommodation services they are saying. So how we have to jointly read it? Earlier, renting of residential dwelling to an unregistered person is exempted. That's it. But you are also staying in PG, no? That's what paying guest. You are also staying in hostel, no? Hostel, no? You are also staying in student housing, no? Sir, now they are saying that it is liable to GST. Abdiya. I will come at the appropriate time. Don't worry. Next one, education and training. We already discussed that, sir, approved vocational courses. If it is approved by ITI, ITC, sir, earlier we said that NCVT, National Council for Vocational Training. Now they have changed the body's name, NCVET. That's it. So any approved vocational courses by NCVET is exempt from GST. Okay, or SCVT, state also allowed. Sir, flying training courses conducted by FTO and approved by DGCA requiring a completion certificate are exempt from GST. That means earlier everyone was approved under NCVT. Now that body's name has been changed. In question paper it will be there that NCVET. So, approved vocational courses provided by ITI, ITC, which is approved by NCVET or SCVT are exempt from GST. That's it. We already know this, sir. In exemption chapter, we discussed training program, service provided by way of training program under the Deen Dayal Upadhyaya Gramina Kaushalya Yojana. Even that scheme should also be approved or certified by NCVET. Earlier it was NCVT. The same one, sir, service by National Skill Development Corporation, NSDC. Sir, exemption on service provided by NSDC, NCVET. That's it. Earlier also NSDC is there. Recognized awarding body is there. Assessment agency is there. Training bodies are there for skill development program. Earlier, if the service are provided by these bodies like NSDC and NCVT, now the name has been changed to NCVET, that's it. Then recognized awarding body, assessment agency, training body for what development? Skill development, it is exempted. Simple. One major exemption is earlier if you are renting residential dwelling for residential purpose to an unregistered person, exempted. But this exemption will not be now applicable to student housing, hostel camps, paying guest accommodation, etc. Wherever approval is needed for NCVT, sir, they have altered the name to NCVET. That's it, game over. That's the existing amendments, nothing. Important, very important, very, very important, my dear lovable students, newly inserted entries. Without this, question paper won't be there. Sir, accommodation services, we said, if the accommodation service is less than or equal to 20,000 per month per person, repeat it. Accommodation service value is less than 20,000 per month per person, sir, and provided for at least 90 continuous days are exempted from GST. That means, my dear lovable students, earlier, sir, residential accommodation provided to an unregistered person was exempted. Correct? But now you are staying in PG, you have to check two conditions. Condition number one, whether you are paying per month, per person, sir, less than 20,000. Don't stop there. One more additional condition is there. Whether that for a continuous period of at least 90 days, then it is exempted. Otherwise, it is taxable. That means this PG and all these people have to collect tax under FCM. Very good. Following service exempt, if the above conditions are satisfied, this is the one-line summary. Hostel accommodation, service apartment, hostel booked for longer period, hostel run by charitable trust, if two conditions are satisfied. Condition number one, if the accommodation service value should be less than or equal to 20,000 per month per person, point number one. And you should book for a longer period. If you are booking only for 1 month, 2 months, then it will be taxable. Oh my God. Super, sir. Next one. Education related services called as affiliation services. Affiliation. Sometimes if you go and see that, they will say that it is affiliated by, sir, this university, this, like that. So, affiliation services provided by Central or State Education Board. We know that we are having an education department in Tamil Nadu, in Kerala. So, Central Board is there and State Education Board is there, or council or any other similar body. That means the board is providing affiliation services to Yark, sir, to a school established, owned or controlled by government, sir, it is exempt from GST. Okay, sir. Because government is providing service to government. Government bodies are providing service to government school, exempted. But if they are providing to private schools, taxable. Oh my God. Sir, to colleges and all, affiliation service will be provided by universities. If you go and see any college, they will say that affiliated to this particular university, it is taxable. Wow, fantastic amendment. So, if the affiliation service has been provided by government bodies, to the government school exempted, to private school taxable, and third one is to universities to college are taxable. This will be tested in examination this time. Railways, Indian Railways. Sir, railway providing service like platform ticket. Sir, when you are going to platform, you have to take platform ticket, right, sir? Retiring or waiting room services, you can go and say, sir, happily sleep in AC room called as clock room, waiting room, etc. Battery operated car services to individuals are exempt from GST. So there will be one line item will be there. Services provided by Indian Railway by way of platform ticket sale, retiring or waiting rooms or clock room, battery operated car services to individual are exempt from GST. Super. Sir, if you see the railway, we will be having Southern Railway, Northern Railway, Eastern Railway, Western Railway. This is called a zone. So, sometimes one zone may provide service to another zone. Or inside one zone, inside Southern Railway, we will be having divisions, Division 1, Division 2, Division 3. If Division 1 provides service to Division 2 or Division 3 provides service to Division 3, it is exempted, my dear lovable students. So, service between either one railway zone to another railway zone or one railway division to another railway division are exempt from GST. Between railway zones or division, please don't collect GST. Super. Services by SPV. SPV means special purpose vehicle. To Ministry of Railway are exempted. If you go and see the railway station, there will be escalators will be there. Lot of railway track will be there. Lot of infrastructure will be there. Do you think that the train master will come and do all these things? No. There is a body called as SPV. Sir, exempt service provided by SPV to Ministry of Railway. What is the duty of this SPV? They will construct the infrastructure for the railway department. That's what special purpose vehicle. They are for special purpose, including allowing use of infrastructure and maintenance services, including usage of the infrastructure, maintenance during the concession period for consideration is exempt from GST. So, my dear lovable students, service provider is SPV, special purpose vehicle. They will be providing service to Ministry of Railway. What service they will be providing? Construction service, maintenance service. They will clean the entire railway station and all, escalators and all infrastructure, they will keep it pakka. That will be exempt from GST. That's it. Because this SPV has been created for the purpose of supporting railway. Then after they collecting GST from railway, they are paying to the government itself. Government is saying that leave it, man, exempted, man. Sir, we talked about EDU, electricity transmission distribution. Electricity transmission distribution till the tubewell of the farmers are exempted, right? Now they have added exemption on service like rendering metering equipment. For example, metering equipment I am giving, or testing meters or transformers. I am renting the transformers to some other person. Ancillary services. Okay. Releasing connection. I am releasing connection. I am shifting meters, sir, from one place to another place, or issuing duplicate bills are exempt from GST. That is ancillary services. Because electricity transmission distribution utility, we all know that, sir, transmission or distribution utility by a transmission or distribution utility are exempt from GST. To that, now they have added ancillary services, additional support services such as renting metering equipment, testing meters, transformers, releasing connection, shifting meters and issuing duplicate bills are now exempt from GST. Sir, I am like a Vasigara, sir. Vasigara means not that Vasigara. I am Vasi, sir. I am fully into the research. I am going to do a research why COVID has came. Government said that, Panapa, you engage in that. So government funded research and development service I am going to provide. So I am going to do R&D services funded by government entities. So there are government entities who will be funding me. Or notified research institution are exempted, provided they are notified at the time of supply of such service. That means I am going to do a research and development. That research and development is a approved research and development from government. Government is saying that, please do this research. For that, I am getting some consideration. That is exempt from GST. Reinsurance services. We know that life insurance service is exempted. Certain life insurance. Correct. Anything which are ending with Yojana are exempt from GST. Right. Now, in order to reduce the risk, sometimes one insurance company will go and insure with another insurance company to cover their risk. That is also exempted. The second insurance company also will go and do insurance with the third person. That is also exempted. Exemption on reinsurance service for specified insurance scheme like life, government, general insurance, etc. Now, retrocession services, that is ceding risk to another insurer. One insurance company is taking the insurance. Sir, you have to check that what is the taxability of the main insurance. Is the main insurance is, sir, exempted, then the retrocession services are also included in the reinsurance under this exemption. It's like, my dear lovable students, one main insurance will be there. This will be provided by one insurance company. Correct, sir? This insurance company will take insurance with another insurance company to cover themselves. Sir, that insurance company will take with the same insurance company, please cover our risk. Two insurance. Sir, retrocession services are also, retro means repeated. Back is also exempted, sir. Now, I'm continuing, sir. These are clarifications in the exemption. Sir, I'm a GTA goods transport agency. I'm providing cargo handling services like packing, loading, unloading, etc. We all know that this is a composite supply. Correcta? Correcta? Yes. So GTA with cargo handling service like packing, loading, unloading, etc. These are naturally bundled services, man. So you have to check that. One invoice or bundle invoice. There is one single invoice or separate invoice. If it is single invoice, it's a composite supply of transport of goods, man, irrespective of the invoice method used. In that invoice, whether you are showing 100% of the value or whether you are showing split, whatever it may be, my dear lovable students, in the main invoice itself, if you are showing this is the value for transportation of goods, this is the value for packing, loading and unloading, it will be treated as a composite supply. Hence, the principal tax rate will be applicable. But separate invoice has been raised. Like, my dear lovable students, sir, one single invoice for the transportation of goods, another invoice for this ancillary packing, loading. Then, if service is not provided in the course of transportation and invoiced separately, it will not be treated as a composite supply, taxable individually as what handling services? Cargo handling services. Whatever tax rate applicable for the cargo handling services, at that rate, you have to tax. Easy, no? Taxability of loan from the overseas affiliate to Indian affiliate. Super, sir. So there is a overseas affiliate is there. They are giving loan to the Indian affiliate. Okay. Then this Indian affiliate is liable to pay interest or discount to this overseas affiliate. If the consideration is only interest or discount, already it is exempted. Now give a clarification that if no charges other than what or what, interest or discount, are applied for loan between related party or by overseas affiliated to Indian party, there is no supply, hence there is no GST. But our Indian affiliate is paying processing fee, administration charges are applied in addition to interest and discount. Now, it will be treated as supply of service and GST will be applicable. Easy. If the consideration is only interest and discount, it is NSR exempted. If our Indian affiliate is also paying interest, discount, etc., then my dear lovable students, it will be treated as supply. Easy. Sir, GST on statutory collections by RERA. You know, if you are going to construct big flat with so many, sir, apartments and all, you have to get permission from the RERA. At that time, they'll be collecting statutory collections. Statutory collections paid by RERA, they are governmental authority, are exempt from GST. Because service provided by government are exempt from GST. In that list, even they are adding RERA also. Services provided by RERA are exempted. Easy. That's it. Big slot of amendment exemption done. I'm moving to the next chapter, my dear lovable students. The next chapter is time of supply. Sir, again, these are clarification. I can't say that these are amendments. Simple. Have you heard about 1G, 2G, 3G, 4G, 5G, MODG? Like that, spectrum usage payment. For example, sir, we know everyone know the biggest telecom industry company, Jio. Sir, Jio have to pay spectrum fees to the government in order to get this G. Okay, 5 crore, 10 crore, 50 crore, 500 crore, like that. Sir, spectrum services with deferred payment are treated as continuous supply. Yes, because if the supplier is providing service more than 3 months, it is a continuous supply of service. So, spectrum service provided by government to the Jio is a continuous supply of service. Point number 1. We know that with regard to continuous supply of service, we have to check that whether the due date is ascertainable, due date is not ascertainable. Sir, the due date is based upon the completion of an event like that and all. Now they are clarifying the time of supply provision. You have to check that time of supply for the upfront payment. For example, at the time of getting the spectrum itself, first initially I have to give 50 crores. This is what upfront payment. Then when the payment is due or made, whichever is earlier, you have to go and see the agreement, man. In that agreement, what is the payment due date? Or when you made the payment, that is the time of supply. At that time, you pay tax. That's it. Under RCM, because we know that service provided by government or local authority to a business entity situated in the taxable territory is a person liable to pay tax under RCM. Point clear? And for deferred payment, after this 50 crore, every time this Jio is liable to pay 5 crore, 5 crore, 5 crore, 5 crore like that. Then when each installment is paid or due, whichever is earlier, easy. So upfront payment, due or made, whichever is earlier. Sir, deferred payment, paid or due, whichever is earlier. That's it. This applied to other government allocated resources with similar payment terms. Any license or anything. Upfront is there, follow this. Sir, deferred is there, follow this. That's it, game over. GST on road construction and maintenance under NHA in HAM model. That means I am going to construct the road and I am saying to the government that I myself will take care of the maintenance for next 15 years, 20 years. It's a continuous supply of service. No. Correct. So, HAM contracts are single agreement for highway construction and the operating and management with part payment during construction period and remaining as annuity over 15 to 17 years. So, two services they are providing. One is construction service and also the maintenance services, right? Since they are providing that for continuous 15, 17 years, it is more than 3 months. Then it should be treated as a continuous supply of service. Then, what is the treatment? Same. Payment made periodically or after specified event, treated as continuous supply of service. What is the time of supply? The same provisions will be applicable. Sir, time of supply is when the invoice is issued or payment is received, whichever is earlier. Sir, if I properly raise the invoice on time, then date of invoice or date of payment, whichever is earlier. Whereas if the invoice are issued not on time, that means invoice is not a valid invoice. Invoice is an invalid invoice. That means I have raised the invoice after the due date for raising the invoice. Then time of supply is at the service provision or receive payment, whichever is earlier. Nothing. Date of provision of service or date of payment, whichever is earlier. Sir, if this clarification is not there, then also we are liable to take that like that only. No. Hamada. That's why this is called a circular, my dear lovable students. Easy. There were some confusion. They are clarifying. Annuity payment including interest. For example, if there is any delay because they are saying that they have not raised the invoice on time. If there is any delay, surely IPL will be applicable. Interest, penalty and late fee. Even for that, sir, it is also taxable under 15 subsection 2 clause D. Easy. Very important next slot called as value of supply amendments. What value of supply is saying that I am a manufacturer, I am having a dealer for selling the manufactured goods and general public is buying the goods. Sir, when dealer is selling the goods to the general public, we will provide warranty. What is the taxability of the warranty is what the question. ITC availability for warranty replacement and repair services, my dear lovable students. For example, if distributor replaces goods or part under warranty from their own stock. For example, manufacturer supplied goods to the distributor. Distributor supplied to the general public. General public said that within 1 year there is a warranty, but this machine is not working. I want a replacement. Distributor don't have any other option. Distributor from the own stock, he will give that, replace that. Now, the damaged stock is there with the distributor, he will give back to the manufacturer and manufacturer will replace the new one, right? Sir, and later get replenished by manufacturer without any charge. No GST is payable on the replenishment. Then for this replenishment transaction, GST will not be applicable because there is no consideration because earlier piece was a damaged piece, man. Sales return, given back, that's it. Further, the manufacturer does not need to reverse any ITC for the replenished goods or parts. Sir, here the manufacturer already, he would have taken the what? ITC. That ITC need not be what man reverse because it is in the course or furtherance of business. No. During warranty period, I only said that if there is any problem in the product, you can give back to me. So, general public given back to the distributor. Distributor replaced with a good stock. Now the distributor is getting the stock from the manufacturer, my dear lovable students. For that there is no GST and manufacturer also no need to reverse the ITC. Super sir, fantastic sir. Now GST implication on warranty. There are two types of warranty are there. One is basic warranty and other is extended warranty. Basic warranty in the sense means I am selling today a fridge. Okay. For this fridge, my dear lovable students, 1 lakh rupees is the fridge value. 10,000 rupees I am adding as basic warranty. Total 1,10,000 I am collecting. Sir, its cost is if it is already included in the price of original goods, hence no GST is payable separately. Because at the time of original sale itself, I would have paid GST for 1,10,000. Then why are you again paying GST for that extra 10,000 in future? That's it, leave it. But extended warranty, my dear lovable students, if the customer opt for extended warranty, you have to check that whether he is opting at the time of supply or after supply or future supply. Now itself, for example, I am selling the goods. Okay, sir, the value of supply is 2 lakh, for example. I am saying that 3 months, anyway, basic warranty will be providing. But you can take for another 6 months. If you are taking next for 1 year, whatever happened to product, you don't worry. I am collecting extra 40,000 for that. If the price of the product is 2 lakh and extended warranty is 40, total will be 2 lakh 40. Right? And the GST rate for goods is goods. For this is 12%. And for warranty is 18%. Don't pay GST at 18% because this is a composite supply, because I have sold the warranty at the time of selling the goods itself. So 2,40,000 into 12% come to 28,800 will be the GST payable. Comfortable? Easy? So it will be treated as part of composite supply, and principal supply is the supply of goods. Yeppo, if the extended warranty at the time of supply itself. Sir, but if the supplier of goods, as you manufacturer, and supplier of extended warranties dealer are different. For example, I am a manufacturer. I sold goods to the dealer. Dealer sold goods to the general public. I have not sold the extended warranty. This dealer only sold the extended warranty to the general public. Then, sir, GST payable on the extended warranty is supply of service. Supply of service. That means 18% will be applicable and not the 12% they are saying. I'm coming to the next one, man. If the customer opt for extended warranty after supply, it is not a composite supply. Because after the basic warranty period over, they are coming again to shop and saying that I want to now put the extended warranty. Then extended warranty is treated as a separate supply of service, and GST is payable as the rate applicable for the service, that is 18%. Now goods kude with the 12% composite supply. After the supply period, my dear lovable students, it is 18%. That's it. Sir, GST applicability on incentive amount in RuPay, BHIM, etc. Actually, we are scanning the amount now. Once we scan the amount, 100% of the amount the trader is getting. That's why everyone is saying that use GPay, use GPay. But if 1.5% reduction is there, they won't say that kudu cash kudupa, because unnecessarily 1.5% is we are losing. Actually, what government is doing, government is compensating the RuPay BHIM people. Whether for that GST will be attracted or not is a question. Incentive sharing by acquiring bank with stakeholders as per NPCI scheme is considered as a subsidy. Consideration means consideration includes consideration by and consideration excludes. Consideration excludes government subsidy. Since this is subsidy, that is in future government will give the compensation, incentive to this RuPay, BHIM, Aadhaar Pay, Phone Pay, Google Pay, etc. That's why once we transfer 100 rupees from our bank, exactly 100 rupees are going to the merchants in our bank account. That's why we are happy, merchant is happy. What government is saying that we want to make in India concept. So we will reimburse this banking system as incentive. That is a subsidy from government. For that, no GST is liable to be paid. That's it. We are done with value of supply also. Coming to ITC part, man. First one is not a big deal. Eligibility and condition of ITC. We know that there is 16 subsection 4 time limit to claim the ITC. The time limit for availing the ITC is nothing but, my dear lovable students, 30th November of the succeeding financial year or date of filing the annual return, whichever is earlier. Now they have extended the time limit. Not for all years, don't get tensed and all. If a registered person can claim ITC for invoice or debit note from 1718, 1819, 1920, 2021, for these 4 years, my dear lovable students, for these 4 years, you can claim ITC till November 30, 2021, despite of 16 subsection 4 time limit. You tell me, sir, 17, 18 ITC maximum time limit is 30th November of the succeeding financial year or date of filing the annual return, whichever is earlier. No. But they are saying that 17, 18 ITC can be taken till 30th November 2021. Now you may have a doubt, sir, this time limit and all died. No, then why I am studying? Sir, sometimes for those years, assessments may be going on now in CA final. So, not taken ITC will be there. Government is saying that 4 years, even we don't know the full form of GST. Take it ITC, man. 16 for time limit will not be applicable. That's it. This is a very, 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 very expected important question for examination. ITC claim post revocation of registration. Sir, I am a registered person, my dear lovable students. My registration has been cancelled. I have gone and cried to the department that please don't cancel my registration. They have revoked the NSR cancellation. Then, if a registered person's registration is cancelled, fine. And later revoked, they said that okay, fine. And ITC was not restricted under 16 subsection 4 at the time of cancellation. At the time of cancellation on this date, my 16.4 original time limit was not died. They can claim ITC in the return file till the later of the following date. They have given two date. So, actually this date my registration has been cancelled. On this date I am entitled to take ITC for certain item. Sir, later after certain point of time, my cancellation has been revoked. Okay, wow. Then this extended time limit also I can take ITC later off, not earlier, later off. General time limit 30th November of the succeeding financial year or date of filing the annual return, normal time limit. Or number 2, for the period from the cancellation of revocation order. From the cancellation of revocation order, if the return is filed within 30 days of the revocation order. That means first I was a registered person. Listen very carefully, very important provision. First I was a registered person. My registration has been cancelled, my dear lovable students. Once my registration has been cancelled, I gone and cried, sir, they have revoked. So on this date, my 16 subsection 4 was alive. Because of cancellation, sir, I would have not filed my return. I would have not taken ITC. Then I gone and cried, correct? Then they revived. Okay, fine. For revocation of cancellation. Go pa. Your registration has not been cancelled. Like that they said. So now I am going to file the return. Now I want to take this ITC here. Can I do so? Yes, they are saying that. General time limit, 30th November of the succeeding financial year. Or for the period from the cancellation to the revocation order. That is here only cancellation. No, from this period to this period. This period you want to take the ITC? Yes, you can take the ITC. Yepo. If the return is filed within 30 days of the revocation order, here only revocation order. From here, you take 30 days. If you are filing the return within 30 days, all the pending ITC you can take, no problem, is what the discussion. We'll give you one small question. ABC Private Limited is engaged in the supply of electronic goods. Let them. During the financial year something, the company's GST registration was cancelled on 15th August. So, registration has been cancelled on 15th August, my dear lovable students. Subsequently, cancellation was revoked on 5th February. On 5th February, they said that your registration has been cancelled. And by order from appellate authority, right? Appellate authority, appellate people. ABC Private Limited filed return for the period for which registration stood cancelled on 25th February. So from 5th February, within 30 days, they are very good boys. So 25th February itself, they have filed the return. ABC Private Limited has an invoice on 20th July. 20th July. So here is what July. 20th July. If yes, sir, can they take ITC? If yes, what is the time? ABC Private Limited has furnished annual return on 15th December is what the case. So before, sir, February, here after August, 15th December will come. Correct? That is a normal time limit. Correct? As per 16(6) of the CGST Act, if the registration of a registered person is cancelled under 29, first registration has been cancelled, subsequently revoked by an order. Later, they have passed a revocation order. The registered person can claim ITC for the invoice or debit note that were not restricted under 16(4) on the date of order of cancellation. This is a thumb rule. On the date of cancellation, are you entitled to take ITC? Is 16 subsection 4 time limit alive? Then later when you are filing the return also, you take that ITC. That's it, game over. What a beautiful, brilliant relaxation given by Act. Its ITC can be claimed in the return filed till the later of the following dates. This is a maximum time you can take. Normal time limit, 30th November of the succeeding financial year or date of filing the annual return. Or return filed for the period from the date of cancellation of registration or the effective date of cancellation of registration till, that is from the date of cancellation of registration, till the date of order revoking the cancellation. For this period, you were not supposed to file the returns. For this period, you would have filed the return within how many days? 30 days from the date of revocation order. Come on. Yes, in the given case, ITC for the invoice dated 20th July will be claimed by the later of. If it is earlier, no use in the provision. Because earlier always, what will come, you know, sir, normal time limit will come. That's why later of 30th November, in that earlier of 30th November or 15th December, that is a normal time limit. 30th November of the succeeding financial year or, my dear lovable students, date of filing the annual return, whichever is earlier. Up November or December? November. One date. Then 25th February is the second date. What is the relevance of the second date? Sir, when they filed the return here, 5th February, their revocation has happened. Correct? Then they filed the return within 30 days. So 25th February. 25th February. That is the date of filing the return for the period from 15th of August. What is that 15th of August? The date of NSR cancellation. Till, sir, 5th February revocation. So here you have to take the whichever is later on the date. So 30th November or February, ABC Limited must claim ITC by the, sir, 25th of February, sir. Till 25th of February, they can take ITC because on the date of cancellation of the what man? Registration, 16 subsection 4 was alive. Then future it got cancelled and it got revoked, and once you file the return within 30 days, till that date, old ITC can be taken. This is what the rule they are saying. Simple. This is not much relevant. Still saying, sir, ITC cannot be claimed on tax paid for demand confirmed due to fraud, willful misstatement, suppression of facts. For example, because of the fraud or willful misstatement, you have paid some amount as tax. That cannot be taken as ITC. These are certain clarifications, man. Time limit for availing ITC on RCM supply from unregistered person. We know that if the supplier is an unregistered person and recipient is a registered person, my dear lovable students, a registered person is a person liable to pay tax under reverse charge basis as per section 12.3 and 13.3 time of supply, we know. And these are covered under 9.3 or 5.3, that also we know. Right? Okay. If a registered person receives supply from unregistered person, okay, I am the unregistered person, you are the registered person, and pays tax under RCM, they must issue a self-invoice. This registered person has to issue a what invoice? Self-invoice. Already we discussed in 31 subsection 3 clause F. The relevant financial year of the ITC eligibility is when the invoice is issued. It's not the payment is made. When self-invoice is issued by the registered person, in that year only, the registered person is entitled to take the ITC, not when the supply was received. The year of receipt of supply, put it on dustbin. When this unregistered person has raised the self-invoice, that is the year in which the registered person is entitled to take the ITC. If the invoice is issued after time of supply, interest and penalty will be applicable. Surely that we already know. Sir, the next one, little important one, my dear lovable students. If you go and purchase a car, they will show some demo vehicle. You have to go and ride the demo vehicle. Whether on that demo vehicle, that car manufacturing company or car selling agent can take ITC is a discussion. Sir, we know that demo vehicle, if it is having capacity of less than or equal to 13, its ITC treatment is a discussion. Purchase of demo vehicle by the authorized agent. Hyundai agents will be there. Hyundai is there. Like that XYZ, lot of people are there. They will be selling the motor car, correct? Sir, if the demo vehicle used for trial run or to demonstrate its features to potential buyer, ITC is allowed. Yes. Because without trial run, the customer will not buy the vehicle. So it is also in the course or furtherance of business. So even though the demo vehicle, if they don't sold also, no problem. Because of doing the test drive only, we are buying the main car. Hence that agent can take ITC. Sir, if the demo vehicle is used for transportation of employees or management, ITC is blocked. ITC is not allowed, not used for further supply, hence it's a blocked credit. Right? If the value of demo vehicle is capitalized, you capitalize or you put it on P&L, that doesn't matter, because in GST, whether you are taking to P&L or capitalized, based on that we are not having blocked credit. Capitalization does not affect ITC. ITC is allowed still, because it is used in the further supply. If it is used for, it is used for trial run or for demonstration. Simple. So for demo vehicle, ITC will be allowed if you have used it for demo purpose. If that vehicle is used for the transportation of employee management, not allowed, my dear lovable students. Authorized agent acting as an agent on behalf of manufacturer. I am just a manufacturer, man. I am sending the cars to an agent. I am not purchasing. That agent is not really purchasing. Manufacturer itself is sending 100 cars for selling and 1 car for demo. Then where is a question of ITC for the agent, because he has not purchased at all, correct? Manufacturer can take ITC. Dealer does not buy or sell demo vehicle on his own. So ITC is not allowed, because not used for further supply, blocked credit. For the agent, there is no ITC, but for the manufacturer, he can claim ITC. Easy. ITC entitlement for insurance company on motor vehicle repair. Sometimes during the accident and all, my dear lovable students, this insurance company, sir, insured person will be there, insurance company will be there, and general public will be there. This general public will say that they will charge, they will ask for insurance claim. Small accident. It is not like pakka. It's not like sir, completely not gone. Front bumper gone. Small accident happened like that and all. Then what they will do? No, they will give that vehicle to the garage for repair. Garage. Normal repairing stations. Then repairing stations will raise the bill to the insurance company. Sir, ITC to the insurance company. ITC can be taken by insurance company, because it is in the course or furtherance of business. To get this service, only general people are taking insurance. That vehicle will be given to the insurance company, correct? It is not blocked credit. Invoice, it is name of insurance company. Used in the outward supply. ITC will be allowed, my dear lovable students. This is called as cashless mode. Next one, reimbursement mode. Reimbursement mode in the sense means simple. What they are saying is first the garage have to incur all the repair cost. Then insurance company will give that money. Still no problem, and ITC to the insurance company of the invoice, because garage will raise the invoice to the insurance company. ITC can be taken. Whether it is cashless mode or reimbursement mode doesn't matter. It is not a blocked credit. But in this case, if the invoice is not in the name of the insurance company, then insurance company cannot take ITC, because it will not be reflected in GST or 2A, 2B. It will not be reflected, correct? If it is in the name of the party directly, like a reimbursement, my dear lovable students, sir, insurance company is saying that you go and, sir, change the spare parts from the garage and you just give us the bill. Then the garage will, if the garage raise the bill in the name of that insured person, how insurance company can take ITC? That's what they are clarifying. If it is cashless mode, my dear lovable students, invoice will be in the name of the insurance company. Hence, insurance company can take ITC. If the invoice is in the name of some other person, then, sir, this guy cannot take ITC. Sir, have you heard about telecommunication services, Geo? This fibers and all, they will be putting, sir, road, they will damage the road. For what purpose? No. To putting ducts and manholes for optical fiber cables. Sir, since they are essential for telecommunication service and classified as plant and machinery, ITC will be eligible and not blocked. We know that telecommunication tower used outside the factory, it is and all are not plant and machinery. There is a definition. Now they are asking that the duct and manholes, will that be treated as a plant and machinery? Yes, because without putting wire, how the services can be provided by telecommunication services. That's it. Game over, my dear lovable students, from the another biggest chapter also. We are going to complete the amendments very quickly. Place of supply. Only one amendment is there, but beautiful, important amendment for exam. Sir, place of supply of goods supplied to unregistered person over the counter. 10 subsection 1 clause A. We know. Sir, if the goods are sold to an unregistered person via e-commerce platform, place of supply is based on the delivery address and not the billing address. For example, through e-commerce platform, I'm booking a product. The billing address is my address, but delivery address is some other place where the goods are going to consume, where the goods are going to deliver. So they are saying that don't took the place of supply as a billing address, take the place of supply as a delivery address. An expected question for examination. That's it. A very favorable amendment to the SSC. Very important one. If any amount is credited to the electronic cash ledger before the return due date, but it is used to pay tax after due date, it shall not be considered for interest as long as it's lying in the ledger between the due date and when it is used. Simple. For example, in my electronic cash ledger, I parked 1 lakh rupees. I know that generally I'm liable to file my GSTR 3B within 20th. But because of some personal reasons, I was not able to upload my GSTR 3B within 20th. But still money is there. I already paid the. After due date, I'm coming and paying. By utilizing the already deposited money means that money will not be counted for the interest payment. Evlo favorable on idu paru. XYZ Private Limited had 20,000 credited to their electronic cash ledger by due date for the month of January. January means 20th February. A return of Jan is filed on 10th March. There is a delay where net output tax liability payable to electronic cash ledger is 15,000. How much I deposited? 20,000. Correct? However, they did not debit this amount to pay their tax until 10th of March. That means they have not utilized this amount. That means this amount was there in the electronic cash ledger itself. Determine the amount of interest, if any, under 51. Would your answer differ if amount credited to ECL is only 10,000? So, two things, sir. First one, XYZ Private Limited will not incur any interest for 20,000 that remained in electronic cash ledger until debited after the due date. That means if any money has been deposited in the electronic cash ledger before due date and utilized after due date, for that amount, you don't pay interest. Very favorable. Nyayamanadu. Interest is payable at the rate of 18% on short payment amount of 5,000. But if the amount available in the electronic credit ledger is only 15,000, sir, no, sorry, 10,000, and my dear lovable students, I am liable to pay a penalty of 15,000. Now 5,000 has to be paid from my pocket. For that 5,000, I am liable to pay. But in first case, I deposited 20, but my payable is only 15. That means I will utilize the 15 from entire 20, still balance 5,000 will be there in my electronic cash ledger. That I will utilize for the next month payment. But in second case, my real payable is 15, but my electronic cash ledger balance is only 10. Now I have to pay that extra 5,000 from my pocket, pay along with the interest. How much percent interest? 18% interest. For how much days delay? 18 days delay. How, sir? Because January month, February 20 you have to pay. February only 8 days are there remaining. March 10th only they filed the return. So 8 plus 10 comes to 18 days. That's why 18 divided by 365, total 44 rupees. My dear lovable students, you are supposed to pay the interest. Beautiful amendment, no? The last part, we are coming to close the amendment session, man. TDS and TCS. Very, 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 very important amendment. We all know that notified persons are liable to deduct TDS. Who are the notified persons? Sir, any authority, board or body set up by parliament with at least 51% control, or society or public sector undertaking. The third one, this has been added. This has been added. A registered person supply metal scrap to another registered person. Beautiful. Sir, I am a registered person. I am supplying metal scrap to another registered person. So this registered person will pay consideration. Deduct TDS. Deduct TDS under section 51. Deduct TDS under section 51. But we are having already, so that means only this item is an amendment. If a registered person supplied metal scrap to another registered person, the recipient is liable to deduct TDS. Okay? We already having non-applicability of TDS. That is, if the goods or services are between PSU, public sector undertaking, between PSU, sir, one PSU public sector undertaking is supplying goods or service to another public sector undertaking, even though the contract value exceed 2,50,000, no need to deduct TDS. Sir, between all these people, no need to deduct TDS. Whether or not they are distinct person, correct? When goods or service are supplied between listed in 15.1, except for those receiving metal scrap. That means if one public sector undertaking is supplying metal scrap to another public sector undertaking, for this metal scrap, TDS has to be deducted even though it's an intra-supply between these people, between the notified people. Earlier, between notified people, there is no TDS concept at all. Now, between notified people, if they are supplying metal scrap, sir, TDS will be applicable. TCS, very simple. What is amendment? Earlier, it was 0.5 rate and IGST 1%. Now, CGST 0.25, SGST 0.25 and IGST 0.5. The rate has been reduced. Rate has been reduced to 0.25, 0.25 and 0.5. Now, this rate will not be applicable. That's it. That's it. So, in the TDS, if a registered person is supplying, sir, metal scrap to another registered person, the recipient should deduct TDS. That's it. The second one, sir, the TCS rate 0.25%, 0.25%, total 0.5%. What is the amendment in e-way bill? As we already know that the threshold limit for e-way bill is 50,000. My dear lovable students, mandatory generation of e-way bill. Sir, if you are an unregistered person, you are moving goods from one place to another, irrespective of the value, you have to generate the e-way bill, then unique enrollment number will be generated and it will be communicated. Is what? That means every unregistered person is supposed to generate the e-way bill to move goods from one place to another. The last amendment, man, registration and return. With that, we are through with the entire amendment discussion. Simple. Sir, in section 22, person liable for registration. 23 is the person not liable for registration. Not liable for registration. Who are the person not liable for registration? Agriculturalist. Those who are exclusively supplying exempt supply. Those who are exclusively supplying goods or service or both, which are liable to be paid on RCM. For example, GTA, no need to take registration. Correct? Person making only reverse charge supply are exempt from registration, except those supplying metal scrap to a registered person. That means I am an unregistered person, my dear lovable students. If I am supplying unregistered person to a registered person metal scrap, then they are saying that I am not excluded from taking registration. That means I have to take registration. This is biometric Aadhaar authentication extended to all over India for all the state. Now, when you want to take a GST registration, you have to do biometric Aadhaar authentication. Biometric Aadhaar registration for registration is applicable to all state and union territory. It is not the option of the state to choose whether Aadhaar authentication is there or not. Additional verification steps if AA is not opted. If AA is not opted, Aadhaar authentication is not opted, applicant must provide a photograph and verify documents at the facilitation center. The government want to know who you are. Your photograph is needed. The application is complete only after successful verification. Only after verification. That means in that facilitation center, government confirms that yes, this guy is what they're going to take the registration. Then only your registration certificate will be processed further. And the last one, sir, Section 29. Super, sir. This is an expected question for sir examination. 2 additional clauses allow to PA to cancel a person's registration, which is nothing but we know there are certain circumstances in which proper officer will cancel the registration. Now they have added two more. Registration may be cancelled if the return are not filed within 30 days of the revocation order. Super, Kanna, super. That means you are a registered person, my dear lovable students. Your registration has been cancelled. You gone and cried revoked. For next 30 days, you have not filed the return. Again, they will cancel the registration. And in case of retrospective cancellation, from the cancellation date to the revocation order. That means, sir, after your registration has been cancelled, my dear lovable students, you have gone and asked for revocation. Once they revoke within 30 days, mandatorily you have to file the return. Otherwise, they will again cancel it. That's what the clause. Sometimes they will cancel retrospectively. Order will be passed only today. But my dear lovable students, the registration will be cancelled retrospectively. Then from the cancellation date to the revocation order, entire amount will be cancelled. That is, whatever earlier, all the old period will be cancelled if you don't file within 30 days. Sir, important, very important, very, very important. There is a new return called as GSTR 1A. Sir, who is required to furnish GSTR 1A and when it should be furnished? Sir, generally our outward supply will be furnished under GSTR 1. Am I right? Sir, if there is any mistake in GSTR 1, after furnishing GSTR 1, before furnishing GSTR 3B, you can amend the GSTR 1 while file a return called as GSTR 1A. The registered person may amend or add details of outward supply in GSTR 1A after filing GSTR 1, but before GSTR 3B for the same tax period. So after you furnish GSTR 1, before you are furnishing GSTR 3B, in that cycle gap, if there is any mistake in GSTR 1, you can change by filing GSTR 1A. It is only optional, man. If you want, you do it. It's not compulsion. The changes made in GSTR 1 will reflect in GSTR 3B. Whatever making mistakes you are correcting in GSTR 1, sir, this you will put it on dustbin because automatically GSTR 1A will replace GSTR 1. This GSTR 1A will be reflecting in the GSTR 3B for the same tax period. Because first you filed GSTR 1, then 1B, then only 3B. But if you furnish GSTR 1, the credit would have been passed to the recipient. Later you are coming and altering GSTR 1, sir, the recipient would have taken ITC, correct? That credit would have been passed. Hence, recipient can claim ITC in 2B for the next tax period only. Sir, once you furnish GSTR 1A, the ITC consequences will go to the recipient only in the next tax period. GSTR 1A is available after the filing of GSTR 1 until GSTR 3B is filed already. Soliach. Come on. Now, what are the details you have to give in GSTR 1 or 1A? There is a limit amendment symbol. You have to upload invoice wise. For interstate and intrastate supply to registered person. Sir, is the recipient registered person? Invoice wise you have to upload. We already know. For interstate supply to unregistered person, invoice more than, sir, 1 lakh. If the value of invoice is more than 1 lakh, invoice wise has to be uploaded. This consolidated details. For intrastate supply made to an unregistered person for each rate of tax. That means if the value is less than 1 lakh, rate wise 5%, 12% you upload. Interstate supply to unregistered person, invoice up to 1 lakh for each rate of tax separately for each stage. Simple what they are saying. If the recipient is a registered person, upload invoice, sir, individually. If the recipient is an unregistered person, is it an interstate supply? Is the value of supply exceed 1 lakh? Invoice wise. That's it. All the remaining consolidated wise, which is nothing but a rate wise. Sir, this is a very important amendment. Sir, GSTR 4. We know who have to furnish the GSTR 4? Composition dealer. They are supposed to furnish the GSTR 4 on 30th June. Earlier it was 30th of April. They said that after March immediately you are giving some extra time you give. So they come up with 30th June, followed the end of the financial year. This will be tested for MCQ 1 mark. 30th June is the time now to furnish the GSTR 4. And now annual return section 44. Symbol, in financial year 23-24, if your turnover is up to 2 crore, don't file the annual return. They said that up to 2 crore, no need to file the annual return. These are the major amendments. 100% of the amendments has been covered, my dear lovable students. You have to just 10-page material only. Just for spacing purpose, I have given some extra. That's it. It's a 10-page material. This has to be heard once or twice before your examination. Plus, in indirect taxes, you have to go to the current RTP. It's mandatory nature. Without completing current RTP, you don't go to the examination. I believe that this amendment discussion for the 1 hour will be so much useful for you. If that is the case, give a thumbs up and inform your happiness in the comments, my dear lovable students. Since it is very nearing to examination, you don't have much of time. I am not talking much. Take care of your preparation. I believe that this video at this time will be very useful for you. We'll meet at the appropriate time. Thank you. Bye-bye from ANM.